I'm Jake Tamarkin with Everyday Life. A couple of years ago, I was changing jobs and life insurance I had from my employer, went out on the individual market to replace it, and had an awful experience. I'm sure if any of you have bought life insurance, you know it's not the most fun thing to do, but what really surprised me was how difficult it was to get good answers to just basic questions like, do I even need it? What kind should I get? How much? And even though I've been in the insurance industry for 20 years, I was shocked. This was my first time as a consumer, and I was shocked at how difficult it was just to get good advice I could trust. And as I dug into it further, I came to learn that I'm far from the only person that has this problem. Studies show that about 5% of the people who buy life insurance actually get an appropriate amount of coverage. Most people don't get enough, some people get too much, but I think this is a ridiculous statistic. Absolutely, you know, as someone coming from the industry, I think we should collectively, it's a head scratcher, you know? So, well, how could this possibly be happening, right? As we dug into it further, what we found was that basically the advice that you get is a function of who you get it from. Most people get their advice on what kind of insurance and how much from an insurance agent. And agents sell coverage that I describe as looking like a rectangle, because if you chart it out over time, the coverage just kind of stays the same, right? The thing is, if you could afford the services of a financial planner who ran the numbers for your situation, what they would end up recommending would actually look more like a triangle, because they know that your needs are actually going to decline over time. As your kids grow up, your savings build, that sort of thing. They also know that a triangle costs a lot less than a rectangle, a lot less. But unfortunately, to get the kind of advice that's going to put you into a triangle instead of a rectangle requires paying thousands of dollars for a financial planner, and takes weeks and weeks, and you got to go dig up a bunch of documents or whatever and hand it over. It's incredibly inconvenient and out of reach of most families. The thing is, this is a serious problem. Not just 5% of people buying the right amount, but actually, if you look at the whole market, there's a $20 billion annual revenue opportunity in life insurance to serve people better, to fit people into coverage that actually meets their needs. The way we approach this is through what we describe as an online insurance concierge. What we mean by that is that we use technology to combine the services of a great financial planner with the convenience and modern buying experience of an online digital agency. So let me show you how this works here. Okay, so what's going on here is we take people through a very basic set of questions that people can answer off the top of their head. And in the background, we're pulling in data from Census Bureau, IRS, other public population data to fill out, basically do a discounted cash flow analysis of their entire life, using those other data sources to fill in the gaps using statistical inference. So we asked just a few basic questions here, right? Do you have any dependents? If so, you know, what are they all about? And it's just through reflexive questionnaire. So if you only ask what we need to know, most people can complete this in about 3 minutes. What's funny about these questions here, these financial questions, is some of them we actually don't even need to ask, but in user testing, because they're lower sensitivity variables, but in user testing we found that people didn't take our math seriously if we didn't make them think harder. So it's kind of funny, but draw the triangles before. So what's happening here is we're recommending a coverage plan. Someone gets $700,000 worth of coverage, right? And I think in this case we said they were a parent of a newborn.
But we have the video.
Hey, Chris.
And still can be taken.
Okay. Anyway, so we've got a parent of a newborn that gets $700,000 worth of coverage, but because of this, what people in the industry would call term laddering, because of this approach, this person's only paying $21 a month for their insurance, and then it's going to step down over time. And of course, we make it possible for people to just go ahead and complete the purchase on our site because we are a licensed agency and we have the relationships with the insurance companies. And yeah, so we just launched. This is kind of our MVP, if you will. And we are focused now on building relationships. We do more of a B2B2C distribution model. So my ask here tonight is, first of all, we would love your feedback on it. If you come and try it out, love any feedback there. We're raising a round, so we're looking for angel investors. And if you know anyone in the credit union space, I'd love to talk to you about possible distribution, or really any other financial institution. Thank you. I'm happy to take any questions that you may have. Yeah, in the back.
Who's the second B? You said you're primarily B2B2C.
Yeah, good question. The question was who's the B in the B2B2C? There's 4 channels that we're focused on. Credit unions first, then personal finance influencers, small employers, and gig economy platforms. Yes.
Will you provide customer service as well? Like you're going to be a middle between the insurance company
Yeah.
and the client. So do you provide customer service in case anything happens?
I see. Yeah, in 2 ways. Up until the point of sale, we are there at every step, providing service and support. For ongoing support, with the policy once it's sold, we leave it to the insurance company to handle that. So we kind of step out of the way, make it more direct for consumers. But we continue to engage with them. Because of our holistic approach to financial planning, we're able to identify other needs. For example, a lot of our clients aren't saving enough, and savings is really the foundation to an insurance plan. So we intend to engage with them on those other needs down the road. Yes, sir.
What do the underwriting final companies think of your triangles? Because they may prefer rectangles.
Yeah. Well, yeah, it's been a journey. So I've been working on this for over a year. We went through an accelerator program dedicated to the insurance industry, and through that probably talked to 70 or 80 or 100 insurance companies. And definitely different companies are at different points along the way. But some of them are waking up to the fact that the market is actually shrinking. That the penetration of wealthy people is great. It's amazing. Life insurance is doing great among wealthy people. The use of life insurance among middle-income families has fallen by 40% in the last 30 years. And so some of the more open-minded insurers are looking at that and trying to figure out how to reverse it. And they have been responsive. Yes, ma'am.
So for life insurance policy, it's typically really long.
Yep.
And would you provide a service to a customer who buy the product and then after 10 years they go, oh, I want to change my mind. I want to find something more suitable for me.
Yeah. Yeah, absolutely. I mean, what we promote is an annual, that users go through that experience annually to make sure that their needs are still in line. And then over time, also, we're growing into additional products and services. So it gives us an opportunity to serve them in more ways.
Will you charge for that?
Will we charge
Will
for?
you charge for that service when you have them to change to a different life policy?
Not more than we charge for the normal service. No. Yes, ma'am.
Are your solutions mostly term insurance or the cash value insurance come through as well as part of that?
So, I'm sorry, I haven't been doing a good job repeating questions. The question was, do we mainly use term insurance or are there other types of life insurance? It's 100% term insurance. It's good question. Thank you. Yes, sir.
Yeah, so what's the, I'll email you so I can run it.
do, yeah, and, you know, we have to make a lot of assumptions, and that's where about what, you know, the future growth of their savings, of their income, and that's where the statistical inference work is really critical, you know, to forecast how someone's earnings are gonna grow, you know.
Don't forget the mortgage is decreasing.
Right, yeah,
And one thing in the industry, it's almost like whatever, I don't know if you tell this to people, but they call it terminating insurance at work. You know, it goes away, you found
Yeah.
that out. But as people age, it actually becomes the worst buy.
right.
You know, I don't know if people know that.
Yeah, well, it's funny, because I think my time's up, but, you know, some younger families are the ones who probably need it the most, but we get the most inbound traffic from seniors.
Just one quick thing, this
Yeah.
the definition of insurance is, insurance, when you don't need it, you can buy as much as you want, for as cheap as you want. When you need it, you can't ever buy it for any price.
That's great, I might borrow that. Well, thank you all very much, really appreciate this opportunity.